In this video, I'll be going over some of the end of chapter problems for chapter 12. I've also published a template that can assist you in completing the Connect assignment if you'd like to use it, for example, using it for check figures. Template's completely optional, but you're welcome to use it because this chapter is rather challenging. So let's start with problem number 45 that is seen on page 1230 and 1231 of the text. Carlton holds undeveloped land for investment. His adjusted basis in the land is $200,000. The fair market value is $325,000. On November 1st of 2017, he exchanges this land for land owned by his son, who is 31. The appraised value of his son's land is $320 with a basis of $310. So it asks us in Part A to calculate Carlton's realized and recognized gain or loss from the exchange with his son and the father's subsequent sale of the land to a real estate agent on July 19th, 2018 for $375,000. So I only changed one figure in this problem, and that is $199,000. They have the basis for the father or Carlton of 200, so that's the number I changed here. Otherwise the other numbers are the same. There's really two parts to this question in Part A. There's one, what is the father's gain or loss on the trade to the son? Well, at the time of the trade, there's no gain or loss realized or recognized. Certainly a realized gain mathematically, right? Because he has an adjusted basis of the land of $200,000, and he's receiving something of value that's valued at $320,000 fair market appraised value from his son. However, that realized gain is not recognized. So if I change this to father's recognized gain, there's zero at the time of the trade. However, the father did not hold this land for the 2 years. So the second part of Part A, question A, means that any deferral of gain is disallowed because this is a related party transaction and the rule regarding holding the property for 2 years has been violated. So then the second part of the question relates to the recognized gain or loss on the subsequent sale to the independent third party who happens to be a real estate agent. Here we do recognize, and as I say, recognize a gain of $176,000, which is the difference between the realized gain on the trade with the son, using my numbers, and to that I would add the realized gain or loss on the subsequent sale to the third party. And that's $176,000. I'll just show you these are the intermediary calculations to determine the realized gain, and that, as I kind of alluded to earlier, is going to be the fair market value minus the adjusted basis of $199 in my case. The realized gain or loss on the subsequent sale to the third party is going to be the difference between the sale price of $375 to the real estate broker minus that difference between the sum of $199,000 plus the $121,000. So that shows a gain then between the independent party and Carlton or the father of $55. Add those two together, 121 and 55, and you're at $176,000. The other two are calculated similarly. I can let you, since I provided a template this chapter, you can kind of experiment and calculate the rest of problem 45. Alright, another problem I'd like to go through to get to another learning objective is number 51. So this goes to the second learning objective. This one's found on the top of page 12-33. Joshua owns undeveloped land that has an adjusted basis of $45,000. He exchanges it for other undeveloped land with a fair market value of $70,000. Part A asks, what are his realized and recognized gain or loss on the exchange? Well, I did change the data, as I usually do, on one of the numbers here, and that was a taxpayer's basis in the undeveloped land, from 45,000 to 44,000. A little bit darker purple. Fair market value, that is to say fair market value of the land acquired in the trade, is given at 70,000. Realize, again, just to reiterate, the difference between the realized gain and the recognized gain is the realized gain is just a mathematical, that's the actual gain. Recognized means that there are tax consequences. Recognized means it's recognized by the IRS, the tax code, as a gain or loss that has tax implications. If it's a gain, it must be taxed. If it's a loss, there's a tax benefit that could be leveraged by the taxpayer. Alright, so in the first case, for Part A, yes, there's a $26,000 gain. For Part B, there is no gain recognized at this point. And that's the idea of an exchange, right, that we can defer the recognition. Second part, Part B, is it says, what is the basis in the acquired land? Well, there are a couple of ways we can calculate this, but the basis in the acquired land is going to be the taxpayer's basis in the undeveloped land of 44,000. My note here actually reflects the actual values, because I do solve these problems using the actual values. So that's the calculation then for the basis of the land acquired. It's just really pulling in the basis of the undeveloped land. Number 52 is similar to number 51. You can practice on that. Just when you look at number 52, one thing you want to realize is that the taxpayer did not replace the garage. She did use the insurance proceeds for the business, and this is considered a similar use. So if it's considered a similar use, then in this case we would have to deduct the insurance proceeds against the amount of the basis, which is 49,000, and 59,000 minus the 49,000, using my values, my figures, is $10,000. The insurance proceeds exceeded the adjusted basis destroyed by the fire, and that triggers then a gain that must be recognized. Okay, moving on then to the next learning objective. Let's take a look at number 60. That goes to learning objective 5. So number 60, which is found on the bottom of page 1235, Crystal owns 150 shares of Carson Incorporated stock that is adjusted basis of $100,000. On December 18th, 2017, she sells the 150 shares for $88,000. On January 7th, 2018, she purchases 200 shares of Carlton stock for $127,500. On to page 1236 for Part A. What are Crystal's realized and recognized gain or loss on the sale of the 150 shares sold on December 18, 2017? Well, I listed the 150 shares. I changed the adjusted basis of the 150 shares to 99,000. Selling price of the shares at 88, and then the new purchase of 200 shares of stock of $127,500. There is a wash sale here because the sale and the purchase of the replacement stock occurred within 30 days of each other, and we know from the wash sale that there really has been no change, fundamental change in the ownership then of this stock. Alright, so just to kind of run through some of the calculations, we have the first calculation is taxpayers' realized gain or loss on the sale of the stock. That will be, if I scroll up a little bit, that's just going to be the selling shares, the selling price of the shares, excuse me, of $88,000, and we'll subtract that from the basis, and we see that the basis is greater than the selling price, and that is a realized or a mathematical loss of $11,000. Unfortunately, because it's a wash sale, they don't get to take advantage of that $11,000 as a deduction. So there's no tax benefit to the taxpayer of this $11,000 loss. And the other problems are calculated similarly for Learning Objective 5. So that covers all of the learning objectives regarding problem demonstrations. Feel free to use the template that was provided to do any additional scenario testing or calculations. And please let me know if you have any questions.